Hello, ladies and gentlemen. I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, briefly, we're starting with the Asian shares in their advance on Tuesday. Of course, they went along with energy and airline counters, of course, leading the rebound as investors took heat from the rally on Wall Street. Share markets in China surrendered all of their gains in the afternoon to trading with the benchmark Shanghai Composite slightly into the red at the market close. Earlier on, of course, the key index hit an intraday high of 3678.2 points, which marked the bourse's highest level since August 12. Now, Japan's Nikkei 225 index, as well as it recouped all of Monday's losses, up 1.2%, with sentiment bolstered by the inspiring hangover from Wall Street and the weaker yen. The dollar, however, rose to 7-month high in Asian trading on Tuesday as investors turned their focus from the Paris attacks to growing expectations that the U.S. Federal Reserve is poised to hike rates next month. The dollar added about 0.2% to 123.37 yen, moving back within sight of its post-payrolls high of 123.60 and away from the previous session's one-week low of 122.23 as investors' risk aversion faded. The yen traditionally is seen as safe haven currency, and it had gained after Paris attacks. U.S. consumer data, however, scheduled for later today, is expected to provide to whether the U.S. central bank will raise interest rates as early as next month, which would, of course, be the first official hike in borrowing costs in about a decade time. In Europe, the equities powered higher at the opening on Tuesday as markets get a boost from the Wall Street market. The Pan-European Stock 600 index opened 1.1% higher on Tuesday. All sectors were, of course, in positive territory. This was in sharp contrast with the Fed and the European Central Bank, which is, of course, considered very likely to take further quantitative easing steps next month, with citing the euro as well as slipping about 0.2% to 1.0663 after earlier brushing a 7-month low of 1.0659. UK inflation data is due on Tuesday, and earnings from major UK companies tracking the gold market was little changed on Tuesday as lingering cautions in the aftermath of the Paris attacks offset the downward impact on the firmer dollar. Also, tracking the demand in major gold buyers. Expectations are growing that the United States will hike interest rates next month. However, this will push the dollar to its highest in half a year against a basket of major currencies, making precious metals more expensive for holders of other currencies. Also, all over the world, the economy is looking very weak, also with China and India, so the potential market for consumers had also declined. Gold edged slightly down 90 cents or 0.1% to 1081.40 an ounce in a late Asian trade, down $15 from yesterday's peak of 1097. Oil markets turned slightly away from gains on Tuesday as the risk premium following the Paris attacks and the French airstrikes in Syria faded, as well as the traders began to focus on the global oversupply in petroleum products one more time. Despite the Paris attacks and resulting French airstrikes in Syria, prices would remain low for the rest of the year. Also, we're looking at the same lower prices into 2016, as well as oil market will stay oversupplied, with most estimates for 2015 ranging from products outpacing demand by 0.7 to $2.5 million per barrel per day. Also, looking at the price today, it dipped back to $41.75 a barrel, leaving it also almost flat within its last settlement. In today's calendar, the most important in about an hour time, UK PPI and CPI data and in 1330 US Consumer Price Index, which of course will give more clear view of what would be the Federal Reserve's decision next month. That's all for today. Keep a close eye on the calendar. We are expecting a very volatile day on major commodities and currencies. That's all. See you next time. Bye-bye.